Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody had a great weekend. Happy New Year, everybody. Wishing everybody a happy, healthy, and prosperous new year. So, as I wrote to over the weekend and this morning, it seems the only thing that changed was the date on your calendar, right? uh, as yeah, markets are pretty much, excuse me, markets pretty much uh, didn't lose a beat. Pretty much same old, same old. In fact, the S&P is still uh, ping ponging between 3,900 and 3,800. We closed the day 38.39. We made a low of 30, what? Uh, yeah, 38.14. We rallied yesterday. We gapped up actually in the Globex session all over the place last night. As you know, we had a gap and just all just looking at your charts. If you guys should pull up your charts here. So the good news is that at least now we have a clearly defined range that we can trade against, right? I've actually was in the session with some of my members this morning, and yeah, I mean this is not all bad if you understand range trading. There, you've got about an 80-point kind of range in here in the S&P. And also, by the way, focusing on range trading, which I haven't talked about quite a bit here, but that's exactly what's been going on here almost now for two and a half weeks now. Take a look at so let me take a look at the Russell and the Dow and the S&P have some very, very clearly defined ranges. In fact, the Dow, if you just look at 33K against 33,600, that's actually pretty good. In fact, we discussed that this morning with my members. That thing hit 33K even again earlier today and has bounced about 225 points. So I guess that's the theme today, right? Range trading. Again, if you are not flexible enough, talked about it this weekend. If you're not flexible enough to understand and not, I wrote about this weekend. By the way, if you want to subscribe to the newsletter, hit the link below. If you want to learn about what I'm doing here with range trading and kind of just adapting to the current environment, again, hit the link. You can spend 5 mornings with me in our market overview. And I am going to set up a class coming up here in the next 2 weeks. I'm going to have another class as well, a free class. I'll let you guys know what the theme is on that as well. We had a promo running this end of the year, and I brought in a bunch of new members. So I'm going to be spending a lot of time one-on-one with folks, kind of doing a lot of coaching and so forth for the new year, because a lot of people did struggle last year. So the theme really coming in, until we break out of these ranges, you have some possibilities there. We've got Fed minutes tomorrow at 2:00 Eastern. And then the big one is Friday, as we all know, the non-farm payrolls on Friday. That is probably what gets us out of this range in the S&P and the NASDAQ and the Russell. Pretty much, the NASDAQ, by the way, is the only one that doesn't have such a clearly defined range. If you think about it, if you pull up your charts, everybody, and pull up the S&P, that's pretty clearly defined. Pull up the Russell, essentially 18K down to about, 1740. And then I just talked about the Dow. And so that's really what you got to work with. Today was all about Tesla and Apple, right? Uh, if it weren't for those two stocks, they by the way, Tesla and Apple comprise about 9% of the S&P. So if it weren't for those two stocks just getting, hammered again today, Tesla, as you saw, traded all the way down to like 106 or whatever. Apple down around 125. Uh, absent those two stocks, we probably would have had an up day in the S&P, the Nasdaq. Okay, so here's the deal: if we can get those to stabilize in the next couple of days, then I think we probably end up breaking out to the upside. But those are the two key stocks if you guys were watching. And as I've mentioned earlier too, the 115 to 120, I have some levels plotted out on Apple. I think those are going to be some great buying opportunities. And Tesla is also Tesla's a little bit dicier. I think Tesla has to break 100 because I think there's too many people that are still kind of hanging on. They're two the same thing. Like they're called stocks, the Apple, whatever. But I think Tesla really has to have a washout day. And I suspect it's probably going to trade down into the mid to low 90s. But it's got to be one of those days where it just looks like it's just falling off the cliff. I think we have to get people really, really scared and finally throwing in the towel on Tesla. So I don't know when that's going to happen. We could get another rebound in the next couple of weeks. And then I think the final culmination of this bear market is going to end with Apple in the probably low 100s, Tesla probably in the low 80s, high 80s or so something like that. So look out for that as a sentiment kind of blowout. That's what I'm looking at. So you guys keep an eye on those two stocks. I think that's what's needed. And I did write about it. I've been talking to you guys about that. I did that in my presentation last Wednesday. The kind of situation that we need to happen. And I still believe that's going to happen probably in the first quarter. What's going to cause it, I have no idea. But that's kind of the setup for the first quarter of this year. Okay. Now, interestingly, again, last night we had bonds rally, right? If you were watching the bond market, we had a gap up across all of the maturities in the 10-year, and the 30-year and the 5-year. And I am looking to get long, either the 5-year or the 10-year. And I'm also, the 10-year actually went up to that 113 level that I mentioned the other day. And then it looked like it pulled back and now it's kind of rallying right back up again. So there's some opportunities going to be presenting themselves in the bond market as well. If you're going to trade futures. We, again, as I mentioned, we're still trying to get long TLT. That also rallied today. TLT closed at like 102 and change, right? Yeah, what was it? 101 and a half on TLT. And so we're still going to try to get long TLT here. Sometime along in the mid 90s or so. Okay. All right. So yeah, bond market. And also what was interesting last night. So we had a lot of movement. If you look at the dollar index, the Dixie. To set up, is it? Yeah. Okay. Yeah. Great. You've been watching a lot of the recordings, John. Yeah. So I'm sure you have a bunch of questions for me. Okay. Great. All right. So the dollar index went right down to the lower end of the band of that range, 103.38. And then had a huge bounce last night. And I have to tell you, that was a little that was a little surprising for me because I wasn't really anticipating that the dollar would rally, especially with bonds rallying. But at the end of the day, we are essentially right back up to the top end of the range. Okay, so you got 105, and again, we have to break above 106 on the dollar index to get us really any meaningful move to the upside on the dollar. But it was really interesting to me. I have to tell you that the dollar actually popped last night. So we had maybe just kind of year end or that type of thing. So now, in regards to any of the currencies, I've been incessantly talking about the yen. So the yen did pull back from one of the levels we had here, and then rallied again. I'm still looking either for a pullback in the yen down in the 75 and a half area, and or a rally up to 79 in the yen. So that's something I'm looking at, that we're looking here at TTS. Um, and the currencies are getting really interesting. I think gold is all. I've been talking about gold breaking out. That kind of popped a little bit today. So all the metals look like, especially now. I don't know if you guys follow platinum, but platinum, that for whatever reason, again, a little surprising. Not really that surprising, but if you watch platinum, that did break out. So again, it's a big market. It's $50 a point. So it's not for everybody. You probably, unless you understand that market, it's kind of thinly traded. But unless you understand it, you shouldn't be trading it, I have to tell you. But it did break out above 1072.50 if you look at your charts on platinum. And now we're going to be up. I got some levels that I'm looking at a little bit higher on platinum. So the metals look to me like they're setting up for some really interesting situation there. That's right now looks like, excuse me, gold, silver, and platinum. Copper, not so much. Copper just seems to be, copper just seems to be still kind of tied in a range. But the other three metals that I look at, silver also looks pretty good. Now on nat gas. So as I mentioned, we were in a nat gas position. We were in UNG. We got filled on that last week. We did stop out on that. We only had 200 shares of the UNG. So we took a loss on that, and that's fine. Again, we're not right on every single trade. So we did take a small loss on that. Kelly, I'm going to leave nat gas alone for now. We gave it a shot. Did you take the initial trade, by the way, Kelly? Back in the day, back in September, I think it was. So, I always tell people, if we stopped out on this one and you took the other one, you're still net ahead, I think like $300 because we made like 600 on the first try. And now this one didn't work out. So, as long as you keep trying, you're going to be fine, right? Oh, okay. Again, it's not a big deal, but for now, nat gas is off the table unless. So here's the thing: if you look at your big chart of nat gas, we have basically broken below we got a little bit of a bounce off off of 475, right? Yeah, how you doing, JT? And last night we just broke down, and part of it is the weather in Europe is actually warm right now, seasonally, and until that actually changes, I'm not really. And by the way, also, if you look at your chart of nat gas, there's nothing on the charts other than a support area right around 350. And so for that reason, we're gonna either wait for some levels to form on the upside or wait for some rallies to short against nat gas. Does that make sense, Kelly? So we're going to leave it alone for now until we get further setup. Yep. Yeah. So now at some point nat gas is going to come back again, but on the charts I don't have anything to. I want to go long nat gas. Clearly, it's dropped from even in the last 2 months, it's dropped from 750 down to 4 where it is right now, and there is a chance it could hold 4, but we don't have any levels to trade against, and so but so here's the thing: if we can get some kind of formation, like a rally-based rally coming out of this, I'm gonna give we could give this a shot on the future side if the setup is correct. Okay, so not entirely taking it off the table, but until we actually get some formations. Yep. Yeah. Right, JT. Well, I think the so here's the thing. Fundamentally, here in the States, we have all kinds of nat gas, right? As you guys know, that's part of the reason why, if you look at a long-term chart of nat gas, the last 10 years, we were at 14, 15 MBTU and traded all the way down to like 2, right? Why? Because again, remember, we just have all kinds of nat gas here in the States. So much so that we're trying to export some of that to Europe. But so it's not really us that's the problem. Well, it's if we have a lot of nat gas and our temperatures are mild, um, that's not going to drive the price of nat gas higher. What's going to drive the price of nat gas higher is in Europe, right? It is when Europe gets cold and they run through their supply, then that's really what's going to drive. Yep, exactly. So, in any event, and that's obviously reflected in the price. That's why we got this, huge drop in that gas. So, anyways, we'll let the charts dictate when we can go back in. But I don't have anything on the charts right now until much lower. We just have a bunch of support levels and stuff on the daily and weekly charts. This is one instance where you have to look at your weekly and monthly charts, right? Right, everybody. So, anyways. Now let's get into oil. Oil again, just kind of back and forth, very similar. I think I mentioned a level in oil last Friday, 76 and a half. Again, not great. We kind of looked at that this morning. We almost came down there and attempted a rally. But all in all, I think we may be starting a new level here, possibly range trading between 82 and 76, 75 area on a 5-point rally. So we'll see how that goes. But again, oil is being nat gas is being driven by the weather in Europe. Oil is being driven by China, right? And how they deal with their zero COVID and whatever, and then also OPEC. So since we don't have a lot of news on that for the time being, I think we probably trade between 75 and 82. So those would be the levels I'd be looking at in regards to range trading, which I talked about earlier, right? Lastly, grains. So, I've been talking about the grain markets. Look at soybeans, had a massive drop, leaving a really nice level and a long. So soybeans is something we're probably going to get into in the next day or so, depending. Love that 1525 area on beans. And then there's a range that we broke out of around the 1480 level. So check out soybeans for a possible opportunity there. Wheat also possibly going down into the 750s, and then corn. Let's see. Corn just bounced off of 667, but I'm looking for a much deeper pullback down around the 650 area on corn. So those are pretty good little setups here going forward. So to wrap things up to everybody, again, what are the themes? Tesla, Apple today, right? Also, nothing but the calendar changed. Just to recap, right? We still have the same trading ranges in the S&P. We can't break above 3,900. We can't break below 3,800. But the good news is, if you understand range trading, you have about an 80-point kind of leeway between the two, and trade at the extremes. That's really the lesson for today. So with that, I'm going to take off. Again, I hope everybody had a great holiday. Happy New Year, everybody. Again, sign up for the newsletter. I got a class coming up. If you want to join me for 5 free days just to check out what we're doing. And I do have a class coming up. I'll announce that probably on Thursday in the next week and a half. So if you guys want to attend that for free, for sure, check that out. Other than that, do you guys have any questions, comments? Yeah, I'm excited about this year. It's going to be, I think, volatility is going to be great this year. But again, if you don't understand how to be flexible and maneuver through these markets, if you cling on to, what I wrote about this weekend, you cannot be in this kind of environment. If you cling to your, market's got to go down, market's got to do this, market's going to go, you're going to get hurt. Right? You got to be able to change directions, because the market, even in the last couple of months, right? If you stuck to your guns on just being super bearish, even in the last, since June, right? We had this monstrous rally from June to August, which if you stuck to your guns and were too bearish, you missed that whole rally. And then we had another rally in October through December that was like another 300-400 point rally. Not to say that we can't short the market, but make sure you pick your spots when you want to short the market. Make sure the market rallies and then you short it. I'm all about. I mean, I think the market's going to probably go test the lows, but positioning is everything. Where do you want to be short? You want to be short at the lows before it rallies, or do you want to wait for those rallies and then get short? Understand? So that's really, I think that's not going to change this year as well. Okay. All right, everybody, have a great rest of your week. I will see you on Friday. If you have any questions or comments or whatever, again, hit the link, support@transparenttrading-solutions.com. You can also hit me on Twitter. If not, I will see you on Friday. Have a great rest of your week. Again, non-farm payrolls Friday, and Fed minutes tomorrow. Okay. So those will probably create some volatility for you. Okay. All right. Take care.